Welcome back to the channel, guys. Sorry I've not been online much, as I've been suffering with a kidney stone. I had a operation last week. Unfortunately, they were unable to retrieve it, so I've now got to go back in again later on. But I've had a few days to recover now, and I'm looking to do the updates to the funds. You've all asked me to do these monthly, so I've been working with the corresponding fund managers as much as I can to get this data out to you. As I like to be transparent, I like to use good quality data, and so I'm trying to get this directly from those fund managers, so there's no sort of ambiguity in the data that you guys are receiving. So today I'm going to look at the Rexshares European Fund performance. So this is the CEGI, FEGI, and FEPI. And I know a lot of you are invested in these three, and it's showing in the numbers. So let's start to go through the funds. So CEGI, just as a reminder for those who are not familiar, it's the crypto equity income and growth UCITS, which offers exposure to 25 leading US listed crypto related stocks, while generating income by writing covered calls on 50% of the portfolio. This is a balanced strategy, targets attractive monthly distributions and meaningful upside, aiming to enhance yield through volatility without materially capping growth. The fund was commenced in June this year, so it's not been around a huge amount, but it's already assumed about 8 million now. So it's up 1.33 million from the prior update that I did. So it's had a fairly good growth in terms of its assets. It is actively managed. It is domiciled in Ireland, which is good from a tax perspective. It's got an expense ratio of 65 basis points. Now, the distribution rate has dropped. It is down to 20% from about 3.97% lower than when we last recorded it. I think it was around 24% prior. But that's to be expected. We've had a very volatile crypto market. I don't know whether we're in some kind of crypto winter or not. Crypto has pulled back from its all-time highs. As of recording today, again, it's had another drop. So today's the 15th of December 2025. Next, we have FEGI. So that's the Rec Tech Innovation Income and Growth. FEGI offers exposure to 20 leading US listed tech stocks, including core FANG names, while aiming to generate income by writing cover calls on 50% of the portfolio. Again, this is a balanced strategy targeting attractive monthly distributions and meaningful upside, enhancing yield through volatility without materially capping growth. So again, the assets have grown substantially here. Again, it was launched in June, end of June, but it's had over 3 million in assets since I last did my update. Again, it's actively managed. Again, it's 65 basis points from a fee perspective. Again, domiciled in Ireland. The distribution has been fairly flat in terms of the rate. It's around 30%, so that's good. We've not seen a material impact there, and that's because it's got slightly more diversity just outside of the crypto space. So there is some tech in there which is offsetting and balancing. We'll look at the performance in a second. And if we move on finally to FEPI, so this is the Rec Tech Innovation Premium Income Fund, which offers exposure to 20 top US listed tech stocks, including the FANG names, while aiming to generate premium income through for a fully covered call strategy by writing options up to 10% out of the money. So there is no that 50% involved like we had with the FEGI fund. So that's one of the core differences between FEGI and FEPI. Again, it was launched end of June. Its net assets, again, are impressive. It's now at 25 million, and that's up over 4 million now since my last update. So again, fairly solid growth in all three of these funds. And I think this is a trend of people wanting to move towards baskets and getting a bit more comfortable with baskets over those single stock tickers. Again, it's actively managed. Again, it's 65 basis points, domiciled in Ireland. The distribution actually for this one is actually up ever so slightly since I did my last update. Okay, without further ado, let's jump into the actual kind of performance numbers now. So again, these are the numbers for November. So start of November to the end of November. And we can see that FEPI is down about 2.86%. Now, these are total return numbers, by the way. Just bear that in mind. FEGI's down 4.63%. and CEGI, the worst off, is negative 10.4%. Now, one thing I would say is, as I said, crypto has gone through quite a pullback, so it's no great surprise to see that 10 almost 10.5% drop for CEGI. The markets generally have been a bit choppy recently with what's happening with people questioning whether we're in an AI bubble or not. And there has been some uncertainty, and we can see even over this period, the S&P 500 has only done 0.25%, and the Nasdaq 100, which is fairly tech heavy, is also down 1.45%. So to see FEPI and FEGI down is no great surprise, in fact. So it's, will the markets recover? Time will tell. Will these funds recover with it? Now, obviously, we've got one which has got a 50% uncapped growth potential, and the other one is a full cover call strategy, 10% up to 10% of the money. So we're interested to see how they cope with the various swings in the market as things occur. I have asked the fund manager to see on the next update if we can actually align it a bit more to the underlyings, so you can see what's happening with the underlyings and what's happening with the funds, so you get a better idea of when things are negative. They may not be as bad as they seem because actually everything's negative. And this is why I wanted to include the broader markets with the S&P 500 and the Nasdaq, so you can actually see that over this period the markets weren't actually even doing that well. So hopefully that gives you a small update in terms of how November formed. So in summary, in November 2025 proved to be a challenging month for these sort of high growth sectors as kind of volatility returned to tech and particularly the crypto markets. While the broader S&P 500 just about stayed positive, the tech heavy Nasdaq, as I said, fell as investors reassessed those valuations. So against the backdrop, the Rexshares funds also faced some headwinds. So FEPI obviously being down 2.86%, FEGI being down 4.63%. We saw moderate declines consistent with the tech sector pullback, to be fair. And CEGI experienced a sharp drop of around 10.4% amid heightened volatility in that crypto kind of equity space. So despite the monthly drawdown, the income generating strategies of these funds remain a key focus for navigating these periods, and they have produced pretty solid income through this period as well. So there you go, guys. Thank you again for the 100% Club to getting to the end of this video. Take all of this as not a financial advice, as education purposes only. Hopefully it helped you, and I will catch you on the next one.